Good morning, Chris.
What's happening? How are you? Are you feeling better?
I am slowly but surely, man, just getting over the fatigue.
Awesome.
This is Brian
What are
Jones.
we going to
I'm
say? We're
here.
going to call it Brian Jones 1, COVID nil.
Yeah, I won
You
this one.
subbed him out, man. You gave him an arm bar from the back you gave him an arm bar from the bottom of Turtle.
Exactly.
There
So
you
this is
go.
Brian Jones. I'm here with professional trader and world's most interesting man, Chris Hood, buried in the snow, I hear.
Oh my God. I'll tell you what, they didn't tell me this when I filled out my immigration forms. I was saying, where do Canadians go on holiday? They went Mexico. And I was like, got to be close.
Yeah,
That can't be a far trip. And yeah, we got, I don't know. It looks like
just a
no windows
slight
are.
oversight. That was just a little oversight.
Little one, just a little one. I was so enthusiastic to just leave Africa that, anything could have been better, right? Um, my windows are half covered. I'm on the second floor of the house and my windows are half filled with snow. They call this a category 4 storm that hit us, and it's a once in 10 years event. So nothing like snow to bring out the douchebag drivers. And what I found here is that we need a crisis to demonstrate how bad our infrastructure is. So, we had COVID, and then we realized that our hospitals don't have enough beds. Now we have a snowstorm, and we realize we don't have enough snow plows. So, well, I wonder what's next.
Do you guys have ice there, or is it just snow mostly?
It's snow and ice. You see, the problem with snow is that it compacts, right? So as it gets colder, it starts to freeze, and then it's really hard to get, your shovel in and everything. So yesterday, day off from the market, I spent it shoveling, getting my car out. My car, pardon me, was completely covered in snow. So
the worst is when it gets warm. If it snows a lot, then it gets warm enough for it to melt slightly, and then it refreezes.
Then it refreezes.
It's like solid ice sheet.
And you know what? As you get older, there's a technique in snow shoveling that when you shovel when you push your shovel across the sidewalk, and where the sidewalks join, the squares join, your snow shovel goes straight into the joint, right? And it reverbs into your hands. And I tell you what, if you've got arthritis or you have an arm injury, you know what? Forget any jiu-jitsu arm lock that you could possibly imagine. The shock and reverb that goes through your hands, because those shovels don't have anything in there to absorb the vibration.
No, I think the pain of getting hit with something like that, or like hitting your fingers or hands when you're cold, it's twice as bad.
Oh my God. We had the temperature on what's today, Tuesday, Sunday nights or Saturday night was minus 27. We had, I think up in Edmonton, it was minus 51 or something. It's something ridiculous. I think it was colder in Edmonton than it is on Mars. So it's, stupid things like that, right?
Right.
And then you look at it and you go, what on earth would drive people to live in a place where it gets that cold? I mean, and then you look at it and go, well, who's the bigger fool now?
Yeah.
So it's pretty tough. The snow can be pretty unbearable, but you get on with it,
Yeah, you'll live, I think.
I look at the snow as the price of having to deal with my wonderful compatriots. That's the thing.
Nice. Well spun.
Yeah.
So the market looks like it's gonna open down a little bit today, huh?
Yeah, a little bit. This is not normal times, right? Remember, I said this a week or so ago. When we have rising interest rate environments, there's a period of adjustment, right? Where fund managers are moving. There's definitely rotation happening out of growth stocks into value stocks and into, elements like energy and banks. Tech stocks are going to be hurt a little bit with all of this change, right? That's just the standard. It takes a while to adjust to it. So, I'm gonna share some charts and show you the volatility that I try and trade on a 45-minute chart here. This is the SPY from last Friday, and you can see, my system was giving me signals to, get out of trades, right? This is, buy some insurance, start, getting your insurance in play here. And what was interesting was during that time, we saw this reduction in the squeeze We saw our trend oscillators giving us signs for a bullish move to the upside, which we got those moves, right? The problem was that if you were looking at this chart and you were over-interpreting, all right, creating a bias that everything is fine and we're going to move strongly to the upside, and you would have said, no, I'm going to buy call options because things are moving up, you're right, you know, things look good, and ignoring your system, okay, you would be killed this morning. With this gap down, all the guys who bought calls in the last hour of Friday, with the anticipation that there will be a continuation today, they are going to get slaughtered today. So the thing is, you really have to build a trustworthy system, and you need to stick with it. You can't chop and change. And I see this a lot with traders, where they'll adjust their strategy to fit the signal as opposed to let the signal drive the strategy, right? So bias, emotion, all right, excitement, enthusiasm, whatever you want to call it, over influences the decision to trade directionally. In this market, you need to be very, very careful about choosing a directional bias. Very, very careful, because things will reverse on you really quickly. So again, it comes down to trade the strongest sectors, trade the strongest sectors in the best possible way, right? That's number one. Number two, you've got earnings season, all right? This is not a time to make a bet that earnings are going to go up and that the expectations for future earnings are going to be positive, right? With rising interest rates, things get a little tougher. And a lot of people that started trading in the last maybe 6-7 years have never experienced a down market, right? That's a huge thing mentally, right? They've only traded bullish strategies. They've only been able to trade in one direction. So it's going to be very difficult. I think for a lot of people, you've got to play the sort of defensive game. This is not a time to be overly attacking. You've got to have sets of rules. I've got my rules that I use for my day trading up on the top here. I use a very successful indicator that I've built that has an 86% win rate with the put call ratio. And I use this as a trigger. And it was telling me on the 13th of January at 1:15 to start buying puts, regardless of what happens. Now you got to start loading up. All right. And, it's an 86% win rate signal. So I have to trust it because it's got a historical win rate. That's really good. I look for that. I look for, if I'm going bullish, I need these bands. You see this green tinge. I need that to be green. I need the price to be above the volume weighted average price. I need the price above the 8. You see what happened here? I had price above the 8, price above the volume weighted average price, but my signal trigger was inverted. And if they are not aligned, you cannot trade. There's no trade there. You have to always abide by that signal. That signal determines direction. So at this point, anyone who bought long calls on Friday afternoon between 3 and 4 for a continuation move today will be murdered. And anyone who actually followed that signal is going to make money. So it's a really powerful way of trading. And it's hard. I'll be honest with you. It's not easy. Because when you've got all this stuff coming at you from different angles that's contradicting what you see. Remember, you've built your tools to actually interpret the data in an unbiased way. It can be very, very difficult to control your brain from the mindset of trying to trade to be right.
You try to
and this is the problem with
all of your signals.
Yeah, a lot of times, when you look at alternative signals, when signals are triggered on other systems, I've seen most of the stuff that's available out there. The problem is a lot of them are not back testable, right? So you can't see whether that signal worked. All right, did the signal work? Was the signal profitable? All of that stuff, it's not there, right? You still, as a trader, have to sit in front of your screen, wait for that little green box, and then you have to go and act. But you have no way of knowing whether that strategy has actually worked in the past. So when you are successful on that kind of strategy, you underestimate or you undercalculate how much of that was luck. And if you're trading on luck, eventually it runs out. And that's the danger that you run when it comes to trading. So
I've noticed that these signals, when you look at it historically, you can go back and look at the trades that worked, and it's like, you see where the signal said buy in and out, and you're like, man, that was a great run. I wish I'd gotten in. And then you think about it, it's like, it seems so simple to say, oh yeah, this was a signal I could have gotten in right here, gotten out of here, made a fortune. But you have to remove that part of the graph and then think, well, would I actually have gotten in down here? You know what I mean? Because it looks messy and uncertain at the time. It's like hindsight. It's funny. You see these huge runs and you're like, I could just get in here, but like, would you?
Well, this is how I work with my charts, right? So, for guys that are watching, this is how I use it. So here, I put a little note whenever I do something on the candle that I've done it on, right? Mm-hmm. And when I build the trade to start, I always put my expectation, all right? I do a price forecast. I see where I think price will move, and I try and see whether or not at the end of the trade, whether my prediction of price was correct. So when I'm trading, when I'm in the trade, so here's CVX, right? So we've already done, we've made profit on a number of trades already. We've used some of that profit to buy shares. We have a very strong signal that happens down here. So here we had, this signal has a 47% win rate, which is reasonable for my strategy that I follow. We have squeezes that we're firing. So if we put this on here, we can see that the squeeze fired there, it got us out. Let's look at the moving average. So if we look at our moving averages, let me just make sure it turns on. What we'll see is columns will start to appear. And how I plan my trades is I always try and look for, let me show you how this works. So if I put that up and I want to do a moving average strategy, let me just get this out of the way here. So from this perspective here, I know that if I'd gone in on these green bars, my historical win rate's only 27% using that strategy, right? So what I can do is I can alter this. I can change this around. Okay, there it's a little better. Let's switch it up. We'll use a reversal. So here it's getting a little better. My win rate's improving. Let's add that in. We'll add that in. And all of these are features within the tool that I have. Now, you can see I've got a 40% win rate. I'm not too worried about this. Okay, this is based on the actual size of the trades that I'm doing if I was buying the equities. What I'm looking for is trend. I'm looking for direction. I'm looking to trade the strength of the signal, right? So if you look here, we have this green line. When the green line gets breached to the upside and the trade is strong, so you can't really see it here, but there's this green cloud at the back. When the trade breaches through that cloud and when we've got signals on our squeeze, that's those opportunities to buy, right? So why did we go into this trade? At this point, we knew back here that CVX was one of the stronger participants in the whole rally in energy, right? It was the strongest performer in the sector. We had a number of confluent buy signals. We had one here. We had all of these were saying buy. Our V score was trending to the upside. Our volatility was coming down. The money flow out of the stock was starting to reverse, all right? Those are all signals, technical signals that give us the opportunity to go, you know what, I can build my trades. I can start putting something in. There's something happening here. It's not a full trade, but we're going to play it. We're going to keep moving in. Now what happens is you've got within the squeeze tool, we can trade different forms of the squeeze, right? So there's different elements to the squeeze. So from here, if I just trade the signals, I'm trading these signals here at the bottom. You can see 50% win rate. Let's have a look at what happens if I follow them both on in and out. Same, let's go into add the momentum bars. So if I'm trading the momentum bars or if I'm trading my baselines, so you can see how that squeeze fired here on that long signal there. Then I got another long signal. I was in a trend and I'm starting to move up, right? So those are where we start taking our signals from. We don't look at this and go, oh, no, that 42% is not a good enough signal. What we look at is we say, you know what? The 42% informs us for our expectation. So it's going to tell us, you know what, if it's only got a 42% win rate, I'm not going to be adding a lot of money to that trade right now. I'm going to let it develop. I'm going to see how it performs over the next couple of days. And when you do that and you build your expectation on price, all right? So when we first got into the trade, the market was telling us a price of around 132, somewhere over here, 133. When we started doing our second lot of trades, the market is predicting a price now of 143, slightly longer expiration, but here it is. Look at the price. There's 132. The market's going to open up at 129. We were predicting initially that this price would be breached in April. We're now in January. This is going to beat the expectation that we had way 2 months in advance. 2 months in advance. So as long as we are trending in the direction of our expectation, you can stay in the trade. There's no need to exit the trade. You can continue to stay in that trade. So what you want to make sure of is that you build a trade plan, right? So building a trade plan is one of the most important things that you can do, right? So here, this one was for, sorry, that one's VLO. What we have here is if you look at energy stocks today, if we go to energy stocks, look at energy stocks, everything is double green, right? You could literally take a dart, throw it on the screen, pick whatever one it lands on, and you could probably land up making money. But there are a couple of things you have to bear in mind. Number one, we don't have any squeezes for it. So how are we going to get sustained movement in the price of the stock moving up if we don't have a catalyst, if we don't have something that's going to push the price up? So that's number one. Number two, only 4 of them have got entries that are valid across the 21, 34, and 55. So if you're looking to trade over a 55-day period, you need to consider the fact that some of them are not above the 55. And the 55 is a key level of support. If you're under the 55, you don't want to be holding too long. You need to see those levels getting recaptured before you can go long. But the squeeze element is the key. All right. So if you're not trading the squeeze, what are you relying on to get the price to move up? Are you looking at people to continue to buy the stock? Are you looking at momentum to continue to go in that direction? What you have to have a reason for it. You can't just go into the trade and say, it's double green, I'm going to go long. It's not going to work like that. That's a very simplistic view. So you've got those elements. You've also got earnings coming up.
So right? What typically this time in this quarter, what are earnings like?
Well, the thing is, you've got earnings season starting now with the expectation in the future in, for a rise in interest rates, number one, and we've got a higher inflation environment. So what that means is for companies like banks, they didn't do too well. JP Morgan didn't have really good numbers and they got hammered for it. But banks and energy companies tend to do better in higher inflationary times, right? So the energy stocks will probably have rosier outlooks compared to the likes of Microsoft and Apple relative to what they were saying 3 months ago. So the thing is, I try not to speculate on the earnings outlook on stocks. I don't trade that way.
I was just curious that this quarter, though. I mean,
generally the first quarter of the year sets the tone for the rest of the year, right? So, these guys are coming out of the fourth quarter of last year. This is the fourth quarter report back kind of thing, right? So they're going to report back on the last 3 months, and then they're going to give us up their prediction for the next 12, right? They're going to change their outlook. In some of the sectors, the outlook will look better. In some of the sectors, the outlook will look worse. How the market reacts to that, a lot of it's already priced in. When we saw the Fed come out with their speech, their notes a couple of days ago, and we saw that massive sell-off, the question I was asking was, how much of that was a surprise? Like, we know that interest rates are going to go up. We know that they need to do it faster than they predicted before, because if they have 3 raises next year, they can't be doing them, at the schedule, one every, let's say if they don't raise in March, that means they have to do July, September, and December. They're going to be raising it in those quarters, right? So it was expected. I think that there was a bit of an overreaction to the impact of the speed at which interest rates are going to change. And that shook everyone. Coming out of the Christmas rally, everyone was long technology. There was a lot of money in Apple, right? Apple was heading up to 185, and all of a sudden, interest rates are going up, and, Apple sort of fell off the table kind of thing. So I think you've got to be, if you're trading, shorten your time frames, bring them in, trade lower time frame charts, and trade them as you see them. All right. Don't let your longer term bias influence your trading setup. All right. That to me is a very important thing, because if I'm in a trade for 1 day, 2 days, do I really care what's going to happen in 6 months? No, I have no interest in that whatsoever. It makes no difference to me. I trade the chart that's in front of me. If I'm buying some of these stocks for my capital account, totally different, totally different scenario. I'll give you a clue. It's like, when you look at here we have the ProShare short S&P. This is the ProShare short S&P 500. So buying this, it's basically going up by the same amount that the S&P goes down. Okay. And here's the short NASDAQ, right? Last week or a couple of days ago, we started getting signals to buy. Now, these are not trades that you would look at and go, oh my God, these numbers are fantastic. I'm going to just trade these, right? Remember, inverse stocks invariably are the worst investment you can make. All right. They're not an investment. You should not be buying them. If you don't know how to trade, do not play the inverse game at all. Zero. Okay. You heard it here first. Do not buy these things, because they are like toxic waste for your portfolio, right? If you buy anything that's inverted, it's designed to go to zero. All right. Remember that it's designed to go to zero. So the longer you hold it, the higher your probability of it going to zero. But look what's happening.
Those are like sort of created for people doing day trades and like short-term trades.
Yes. Yeah, they are hedge products, right? You use them to offset other products that you might have in your account that may be slightly oversized, but you don't want to exit them, right? So, I might have a long position in the S&P 500 that I'm going to hold for the next 5 years. And over the next 6 months, I might buy a short S&P 500 just to offset some of the downside that I'm going to have on that long hold position. I could do two things. I could exit that S&P 500 position. I could convert it into a married put. I could sell calls against it. I could do a lot of things. All right. Nothing's right or wrong. It's just that's what you decide to do as a trader. When you buy the short S&P 500 or the short NASDAQ, I'm looking to trade in a very, very small window. I'm going to hold it for maybe 5-6 days, make some money, get out, go back to cash. If the signals are still valid, I'll do it again. And I'll keep repeating it as those signals continue to be maintained. So here, last week, look what happened. We were in this double red cloud, sell call signal that worked well. We got a reversal signal here on the 5th of January. On the 5th of January, that's 2 weeks ago. It was telling us, you know what? Things don't look too hot. Things don't look too hot. You need to start buying these short positions. You need to start hedging yourself. All right. So what do? We start buying. And as soon as we get these reversal signals and it crosses over what we call our trend line, I can go long in that trade. So we started building the position. Build. Now it's going to have some volatility. Now, why would I not exit the position on the close below the trend line? The reason is because my cloud at the back is still green. I'm still trending up, right? So I don't want to be exiting a green cloud based on one candle below my trend line. It doesn't make sense. I'm still trending in the right direction. So from here, this green cloud is what I'm trading. If it falls outside of this green cloud, so if SH here falls below 1364, which is that level here, you can see there's my stop loss. I'm going to just drag it up a little bit there. Now, if SH hits 1364, I close the trade. I'm out. It's fallen outside of its volatility band and it will be dropping down. It will be path of least resistance will be going to the downside. as long as it stays in that green cloud and it keeps moving up, that's where it's going to be. Here's my profit line. When it hits 1430, I take profits. I'm going to exit the trade, take profits, and see how it handles this zone of price. Once I know it's through that zone of price, because if it gets in here, it falls down. When it gets through here, it can fall down, right? Sometimes you see it bounce off these levels. Sometimes you'll see it fall from those levels as well. So I needed to get there. I'll take profits, wait till it passes there, get back in over here, trade it back up to there, take profits, wait, get in. So that's how you do it. But you've got to trade the story. The hardest thing for most traders is, what's the story you're trying to trade? I define this like a movie, right? If you've got a movie script in front of you, you can't take a great script and hire a really crappy actor and then still win an Oscar, right? You're not, a crappy movie, you could have a crap movie script with a great actor, it's still going to be a shitty movie, right? Excuse the French, but you know what I mean, right? You've got to have the right screenplay, you've got to have the right, themes and subplots and actors, and, the guy who's managing the camera is important, right? All of these pieces have to fit together to trade your strategy. You can't just make this stuff up as you go. And unfortunately, so many traders do that. And then when they lose, it's like they don't take accountability for their lack of planning. What they do is they go, oh, the market turned against me. That's it, and then they repeat the problem again. And it's repeated time and time again, loss after loss, loss after loss, no story, and then eventually you blow your account out, you give up and you say trading's not for you. That's the problem, right? It becomes a real issue for a lot of people, particularly people who are very new, people who are easily impressionable. I've been doing this for 20 years. I've seen many of the fly-by-night kind of guys come in. I've seen the egomaniacs that go on to, they go online and talk about how rich they are and how great they are and all of that. And I'm like, there's no value in that. There's no value in telling someone how good you are if you're trying to teach them. All right, because I don't want people to feel worse about their mistakes by telling them how good I am. That doesn't help anyone. And quite honestly, I make mistakes too, right? Everyone makes mistakes. But if you've got tools that are going to tell you, you know what, you said you were going to do this, and now you need to, you've got to be honest with yourself and you've got to stand up with it. Mm-hmm. I had a client call me once. They had a trade and it was like minus 80%. It was a long call that they had put in play and it just didn't work. They called me and they said, what can I do to turn it around? Okay, so we opened up the chart. And I said to them, look, quite honestly, the best thing you could do is stop trading. And they were like shocked. They were like, well, what are you talking about? I said, your tools, the tools that you have, told you 7 times to get out of this trade. 7 times. There were 7 signals telling you get out. But you held on. You continue to hold on for some reason, whatever that reason might be. Wanting to be right, whatever. You might have watched Jim Cramer say something, I don't know. But there were 7 reasons that you gave yourself to ignore the plan that you had put in play. If you had followed the first signal that was part of your plan, you would have lost nothing. You would have made money. But now you've had 7 opportunities to get out. You're at the point of absolute failure. And now you're trying to resurrect the trade. And it made me think of it. Some people have got a psychological predisposition to make the things harder than they should be. Some people think it's a bit of a kick. I got this down to 0 and I still survived. I came back to trade tomorrow, came back the next day and I survived it. And it's a massive mental issue. So you've got to have a different kind of mindset when you do this. If you're trading for the long haul, understand the tools you need, the script, the screenplay, the movie, that you're trying to play out with those long trades. They are not the same as your trades that are going to generate profits in the short run that you're going to use to buy more of those long-term stock. That's the way I trade. I trade short duration trades. I take the profits and I buy things like Apple shares or Ford or whatever. I buy shares with that stuff. You've got to be consistent and you've got to have tools that work. You can't just read a book on Amazon and say, that's it, I'm going to do it. Because if you've ever noticed in those books, they're dated, number one. A lot of them were written in a period where it's not relevant anymore. And they also give you only a few examples of where it worked. Many of those trading books don't tell you about the times where that analysis or that setup or that trigger didn't work. And if you don't know whether that setup is actually appropriate for the stock you're going to trade, good luck to you. Like that's really where it comes down to. So
is there a particular time? I'm just thinking about from your experience, your historical experience, is there a particular time in the market that reminds you of now?
That's a tough one. 2008 was pretty rough. 2008, the situation that you had leading into that, obviously you had the global financial issues that came from 2008. What's changed and what's slightly different is the access to information now is different. We have way more information available as retail traders compared to what we had before. And I think actually that information overload is part of the problem, because a lot of people who trade, and you've now opened up these floodgates of information, which is a good thing, that information is now in the hands of people who don't know how to interpret it. That's a bad thing, right? And when you don't have the ability to filter out the noise, take out the garbage, and actually focus on what's important, that's where the problems come in. Because what happens then is you land up having, I call it indicator junkie, right? You land up becoming an indicator junkie. And I'll be honest, we're among friends. There was a time in my career where I was an indicator junkie. Every single one that came out with the marketing pitch of this is the only thing you need. I would be the first in line. The problem that I found was as soon as I started building my own, and I would overlay my signals against the product that I just bought, I realized that mine were better. They were giving better signals, more accurate. They had a better win rate. Now, why would I buy something that's you can get it for free? Most of those indicators are free. They just look nice. There's a degree of cosmetics that makes their charts look great and stuff like that. I think that information overload to traders, as well as the impression that this is easy, is different. I think back in 2008, no one assumed this was easy. I don't think there was an assumption of this is easy. You've also got now the meme stock mindset. You've got these social media warriors that go out on Instagram, showing people how rich they are and, whatever. And I see that as, I consider that element of trading to be perverse and unfortunately slightly vulgar, because trading is not like that. If you advertise how easy this is, you are giving the wrong impression to people, because this is not easy. I'll be the first to tell you, this is bloody hard. It takes a lot of work. The amount of work that we put in to get this to work. It's not as simple as, take the next 6 weeks off and you come back and you've got a Lamborghini. It doesn't work like that. And I think that's a false thing. It really needs to change. So
I'm still waiting on my Lamborghini, Chris.
I'm waiting for you to buy me one, man. The thing is, I think for many people, 2008 was a watershed year in terms of the market. But, traders, if there's one piece of guidance that I would give them, is be very, very careful about what you believe to be correct, and informing your expectations, because your expectations and results will be very, very different from someone who's done this for years. And you should not compare yourself. You should not try and beat them. A lot of people have got a lot of money. When we talk about these hedge fund guys that have, this guy called this right and this guy called this right. Yeah, but he also might have called 9 things wrong and lost billions, but we don't talk about that. So there's this distorted perception about who's good and who's not, who makes money and who doesn't. I don't see any value in bragging about who makes what and how much they make. I don't see the value in that. And I don't think it's a good thing for new people to look at that as the measure of success. There are certain key measures to improve as a trader. You should be looking to improve as a trader day in, day out. And if you do not measure that, you only use your P&L, your results will be inconsistent. Your P&L is not the only thing. It's a byproduct of other metrics. And if you're following rules, if you've got a whole set, if you're following your rules and you can measure your compliance with the rules, far more productive. So, I mean, I get quite, on a soapbox about this, because when I started trading, I fell into that trap. Everyone who said that they were brilliant, I would be trying to copy them. And it never worked. And it didn't work because we were two different people. You've got to have a method and a process and a system that works for you. You can use someone else's system. You can take what they do and then customize it for you. But to copy them and try and behave like them, no, that's not a healthy way of doing anything. So, it's been pretty, it's going to get rough for a lot of people out there, because they see all these Bitcoin millionaires and all of that. They want that. And then they go and buy Bitcoin at 60. I mean, how many retail traders over leveraged themselves because everyone was saying Bitcoin was going to $100,000? And in that crash from 62 down to 50 or 48 or whatever it was, 350,000 to 400,000 retail crypto accounts were wiped out. People lost money. Sorry, I've got trades that are going off. They were wiped out. So what do? Like, we forget about that. Sorry, I'm going to have a whole lot of stuff triggering now. So this is the key. And I really encourage people, build a system that works for you. Don't try and copy others. This is easy enough for you to find what works for you. I can tell you that now, but you've got to go through the learn, right? You've got to know your tools. You've got to know who your actors are going to be. You're a movie director. You still need some good people to hold the camera. You still need some good people to do the acting. You need some good people to write the screenplay. All of those components need to be learned over time. My tools help with that. I mean, if people are interested in the tools that I have and how to use them, they're available. So yeah, it's going to be rough, but it's doable, right? It's manageable. You've just got to learn to manage it.
Well, appreciate the insights, Chris, and have a great day, man.
You too. It's good to see you. I'm glad you're better.
Thanks, man. Take care.
I'll see you next Tuesday. Take it easy, buddy.
See ya.
See you, man.